Yo, what's up? I haven't dropped a Tycoon Talk video in a while because the schedule's been crazy. April is booked, May is going, and last 2 weeks of May, we're recording the Summer 21 course that we're dropping at Tycoon Academy. So as you can see, we're moving. So get on the plane. Don't get left behind. Let's go. Now let's chat. So Coinbase IPO'd middle of last week, and if you bought it at its highest, chances are your investment is already down 28%. Okay, and there could be more pain ahead. It doesn't mean there will be, but there's a pretty strong chance that there will be. Here we are again with another feeding frenzy of IPOs on season 10, episode 5. Let me get my popcorn so I can enjoy this show. IPO stands for initial public offering, and you know we don't teach money, we teach life. So check this analogy out. That's essentially a baby being born, right? You don't have enough data, enough information to know how the baby's gonna navigate this world, if they're gonna survive, how long they're gonna survive, how well they're gonna do, are they gonna be successful, or what they're gonna contribute to the society. You don't know that. That's exactly what IPOs are. In addition to that, a lot of companies go public to raise money to continue scaling and growing their business or their operations without having to borrow money from the bank. So as an investor, when you invest in a publicly traded company, you give them your money and the company use your money to conduct business and, products and services and continue hopefully expanding and growing. That's the idea. Coinbase went public and nearly $100 billion valuation, putting each share around $380. And since then, our DMs have been going crazy. People asking what's my thoughts, what do I think, am I going to get it, this and so forth. So today I'm just going to expand and speak on IPOs in general. Quick disclaimer, this video is not to tell you go buy Coinbase or don't go buy Coinbase, okay? To each his own. Is your choice, is your money, not mine. So this is not an advice video. I'm just expressing how I feel and what I've learned based on my time in investing and the knowledge and the skills I've developed over the years. In my opinion, you don't have to own every company that go public. You don't have to buy every IPO. People own every single iPhone that ever came out, every MacBook that ever came out, every Jordan that ever came out, but they don't need to own every single thing that comes out. IPOs don't excite me at all because as a tycoon, you don't have to own every single thing. And after you've been in this game for so many years, you're going to understand why IPOs and the fad and the excitement, the fear of missing out surrounding it, especially in the first few years, is really not that important at all. For a good majority of the public, they might buy 1-2 shares. Maybe they'll put $1,000 in there, right? And their goal and hope is that because the company went public, it's going to go out the roof. So they're hoping to turn $1,000 into $100,000. Investing don't really work that way. Only I don't know what the data is, but it's probably less than 1% of investors that actually go from boom, boom to that. You know what I'm saying? CNBC published an article stating that 60% of all IPOs, about 7,000 companies from 1975 to 2011, actually had negative returns at the end of their first 5 years. All right, now I know a lot of us are millennials. We're fairly new to the game. So let's look at some companies that you and I can relate to because at least we're alive to see these things happening and witnessing them. You and I both use them every day. Let's start off with Twitter. Twitter went public 2013 at $41 a share. In 2017, Twitter was at $18 a share. Well, this is literally a 55% downturn within that first few years. Next is Snapchat. They went public 2017 at $24, then they fell to $10 just 2 years later. That's around 58% downturn. Also, Nicolai, one of the EV companies, went public 2020 at $30 a share, and now they currently trade at $10 a share. That's around 60% downturn on your investment if you bought it at its IPO. Lastly, DoorDash IPO'd end of 2020 at $182 a share. Earlier this month, it traded at around $131, meaning it's already down 30% of its share value. Now, the first reason why IPOs don't excite me is because most companies don't last. Same way most businesses don't last. Same way most diet plans don't work and most budget plans don't work. The second reason is what we've noticed over the years and time is that most people actually buy and invest based on speculation, hype, news, and noise. They don't know enough about the company itself to actually make a wise investment decision because there's not enough data. Most of the valuation attached to these companies right out the gate is unrealistic. And as you know, as people invest with emotions, they tend to drive prices up. And then sooner or later, something's got to give. And when it give, boy, it give. My third reason is pump and dump. This literally just means that the big heavy hitters, big investors, the investment bankers that do the underwriting, their goal after they get inside and own these shares from the inside at a much cheaper price is to drive as much noise, buzz, attention, hype, energy, volatility, just funnel everybody's attention to that company going public. The more the news is preaching about it, everybody's talking about it, spreading it on social media and all these platforms, everybody feels like they're going to miss out if they don't buy it. Now, once it goes public, people buy it. And guess what? It drives the prices even higher. So these investment bankers and insides making 100% on the first day or second day or the first few months. And guess what happens? They start pulling out all their profits. And that's why you see it come back down the way it does. So quick example, if Black Tycoon Talk is going to go public, and I have a bunch of investment bankers on the inside doing the underwriting, and I have big investors in it, they might buy it at $50 a share, right? Now, by the time it actually gets to the point of hitting the public, it might be valued at $100 a share. Now, my job, and maybe not ethically, but the people that are on the inside in the media and the news, their job is to drive as much buzz around Black Tycoon Talk. So by the time everybody else start to buy it, it's at like 180 or 200 bucks. By the time it hit the public, bro, it's too late. So now Black Tycoon Talk goes to 250 or maybe even 300. But if everybody bought it on the inside at 50 bucks, well, we'd have made an insane amount of money. If I put millions in it at the time, I've done tripled, quadrupled my money. And at that point, I'm just going to pull it out, send the share price back down because I've made the money I really wanted to make. And everybody else, the retail investor, the general public is kind of left holding the bag. And it's going to take time before the stock find its actual somewhat realistic price level. Before the dust settles, this can play out maybe the same day the company went public. It can take a week, 2 weeks, a month, 6 months, but sooner or later, the dust will settle. So these are literally the reasons why IPOs don't excite me, because one, it takes decades for companies to actually mature and come to fruition, just like it takes decades for a baby to grow and mature as a human being to add and contribute to the society, okay? Amazon didn't mature in their first 2 years. That's why their share was like $1 or like, even a couple cents. But guess what? With decades of time, this is why long-term investing is undefeated. And this is why we only teach long-term investing and generational wealth. But now Amazon is what? $3,000 plus a share, for almost $3,500, right? So it takes decades and time for these companies to prove themselves, just like how you got to take decades of learning and growing and developing to prove yourself in our society. So with all that being said, the market makes no mistakes. People make mistakes. This is not a battle against money or a battle for money. This is a battle with yourself and emotions. Instant gratification, the hype, the buzz have everybody making poor investment decisions instead of investing in their financial literacy and knowledge primarily, and then taking advantage of the tools and the skills they've developed. Everybody's rushing to investing. Keep in mind, investing does not begin in the stock market. It does not begin with properties. It does not begin with business. It begins with self. And that is where you want to start. That is your IPO. Stay tycoon, chop life. I'm going to see y'all next time. Hopefully I can get on here doing another tycoon talk within the next few weeks. But if I don't, you already know. Much love. Cheers.